Hello everyone, my name is Victor Ambries, and in today's presentation we will cover the preparation and analysis of a multi-step income statement using the example of Royal Furnishing Company. We will also discuss the advantages of this format over the single-step income statement. So the multi-step income statement, we need to understand what it is. It is a financial statement that separates operating revenues and costs from non-operating items to provide detailed insights into profitability. It is used in retail because retail relies on tracking gross profit, which would be sales minus cost of goods sold, to assess product profitability. This is also required by generally accepted accounting principles, also known as GAAP. So the structure of a multi-step income statement goes as follows. Sales, number one. Two, cost of goods sold. From this, we would get our gross profits, which would be sales minus cost of goods sold. Next is our operating expenses, and this would include selling expenses, administrative expenses. Go back. Next is our operating income. So this would be our gross profit minus total operating expenses. Number 5, other revenues and expenses. Number 6, net income. And to get this, we do operating income minus or plus other revenues or expenses. So this is our example for the day. So we have the multiple step income statement. Here it is, and we'll answer A and B. We'll start off with A. So we need to remember the structure of the multi-step. So it goes as follows. Sales, cost of goods sold. From this we get gross profit or expenses, two different kinds, selling and administrative. Next is our total. After that, we have to find our operating income, other revenues. In this case, we only have interest expense. Plug that in, then our net income. So the information needed is provided. We have our sales, we have our cost of goods sold. So here it is, sales minus cost of goods sold equals our gross profit. Plug in our number. Next is our selling expenses. Here it is. Administrative. Here it is. We add those up. We get our total. Next, our operating income. Operating income is gross profit minus total operating expenses. Go ahead and calculate that. Plug it in. Then our other revenue and expense, interest, is the only thing. Plug that in to get our net income. We minus our operating expense and our interest. Here it is. Plug that in. We are finished with A. Next, the advantages over single step income statements. So the multiple step format highlights key relationships such as gross profit to sales. This metric is critical for evaluating product profitability. Single step income statements combine all revenues, which we will not be able to see the gross profit with the multiple step. So why this matters for retail businesses? Retailers rely on gross profit to assess pricing strategies and supplier negotiations. Separating operating expenses allows managers to identify inefficiencies. This also focuses on inventory and expense management in retail. That concludes my presentation. Thank you for your guys' time.